Good morning. This is the crypto day morning. It is the 6th day of October 2018. I'd like to welcome you to this morning's video. All bets, trades, and of the like within one's own risk and reward. First off, let's take a quick look at Binance Coin against Bitcoin, which had several days just hanging in there going sideways amongst the 18. However, a few days ago on the 2nd of October had an interesting breakout. And for a few days it's just been hanging in there, but staying above that area. Found support at about the 00155 handle, and more importantly has found resistance at around the 161.8, which is a Fibonacci number. But throwing that aside, what this means is on the single hour time frame we can see within this level of resistance that it had tested it again. This came back down, so that's really cool in the sense that if it's able to hold a good Fibonacci retracement level from this point here, which is even down to 157, and then manage to get above such, I would be thinking it's got a good chance for decent gains thereafter, or another decent leg higher. Now moving on to Bitcoin on its daily term time frame, staying within this 18 average. 2 days ago, coming up to the 18 average, hanging in there, of highs that is, hanging in there yesterday and so far today with really low volatility. We're going to get into that in just a little bit. On the 400-minute time frame, I was talking about how it was staying amongst the 18 average of highs yesterday. So goes it still the same, as it is far away from the low area. And it's got the 18 average now barely rising. That has a lot to do with the this period in here that got up to about 66.40, and since then has held it relatively well. But again, the volatility is very, very low. We look at this now, just looking at this on a longer term time frame, the 3-day, nothing has changed that pattern, and things were mainly going up, obviously, throughout 2017 up until this point in here. As we can see, it was just green candle day after day. And what I've done is calculated, I made a chart for over the last 100 days, how many of them have that of a higher close than the previous one, or that of an up day. And within such, on March the 15th, 2017, and there's no labels on here. This is, I'm going to try to fix this chart now by actually making it smaller. And on March the 15th of last year, that's when there was over 70 days in a row. And there was quite a few down days that happened up until September the 30th. Even though Bitcoin had a bull market run year, had a lot more decent up days and small down days. January 27th, there was 60 of the last 100 days. And right now it's basically staying around this 50 number. So about 50-50 chance right now of an up day over that of a down day. Next up, I'm going to talk about the volatility, and right now the lack thereof it. Over the last 4 years, the average volatility per day is 4.1459%, just a hair above that number. So what I've done is calculated, okay, of the last 100 days, how many of those days have had volatility higher than such versus lower. So an example of a day here. This day had a high of 93.66. It had a low of 7,876. The differential amongst the two numbers is about 1,500. Which would be, if I take 1,500 divided by 78.76, that would work out to over 20%, definitely well over the 4, but a 20-ish% number. So the vast majority, and definitely all of them in this area, had single days above it. Now granted, this is a 3-day term time frame, but the volatility leading up to this event was much, much higher. So let's take a look at the last 100 days volatility. And there's just interesting numbers. For on the 24th of March 2018, the level was 97, meaning at the time, 97 of its last 100 days had volatility above what its median is, or 4.1459%. Since then, it's been going straight down as we are not getting that kind of volatility per day. On the first day of winter 2016, only 7 of the last 100 days had that kind of volatility. So let's take a look at the daily term time frame concluding both of those periods. And within the March one, March the 24th in here, the 25th day had a not so volatile day with a low of 83.68. But the day before had a low of 8,500, a high of 9,000, a differential of 500 points, which you need about 400, a little over 400 for 5%. This was a 6-7% volatile day. And yes, there was a decent volatile day here, and definitely again on April the 12th. But that was the run ending, of course, during the second leg lower. Now, going before then, and showing what the market looked like at the end of 2016, it was in a very beautiful bull market from these August lows, seeing the price go from below 500 up to 800. Not even doubling, although there was a lot of decent sized gains. But we look at the size of these moves. This was a big move here. Low 765, high 793. So the differential there was 38 basis points. And if we take 38 into 765, 4.9%. But a lot of these days, like this one here, low 771 and a high of 779, was a differential of 8. And that was like 1%. And a lot of these days were like that. This day here, high 772, low 762, differential of 10 points. This day here on November the 15th, the high of 716, a low of 703, differential 13 points, not quite 2%. And this is December 20th. So that was the last day where we had the low number, because the next day it had a huge breakout. And then enter high volatility, as it just takes one session to get things going. And in this case, it was on the 21st of December. And finishing this off with just a quick look at over the last 50 days rather than that over the last 100. It worked out that 50 of the last 50 days, or about 58 or 59 in a row, were at over the median average when it came back time to that of March this year. But as we can see now, it's about 15 of the last 50 days. And when we look at the raw data, and what I have here is I have the percentage moves in this column. So what I have done, I calculated the median here. So I asked the question, is this number greater than the 414? If it is, give me a 1. Well, that means I have seen 4, 5, 6, 7, 8 of the last 8 days not having median volatility. On September the 27th, there was a volatile day in at 4.7%. But before then, there was 5 days with low volatility. And before then, it was a mixed bag, as it was every other day for a few. But even before then, a streak of 3, 4, 5, 6, 7 consecutive days in a row. And here's a spot back in not that long ago. But the market was a little volatile in the middle of August. And as we go up to the top areas, we're going to see that, well, this is when it was 50. Okay, this is the sum here. This is the up days in a row. But right in here in January, that's where every single day had this extreme volatility. 8%, 9%, 18, 9, 27, 33, 6, 9, 16, all of these higher numbers. 41% on this day. What happened on this day? Opened at 15,000, went down to 11,000, but closed at 14,000. We're going to come back to major volatility again. It could take a day, a week, a month, or several months. But it's going to happen where you have multiple months of big volatile up and down moves. Thank you for tuning into today's video and have yourself a great day. Bye-bye.